Hello, fellow entrepreneurs, and welcome to a comprehensive guide on tax-saving tips for entrepreneurs on our YouTube channel. If you're navigating the intricate world of taxes as a business owner, you've come to the right place. In this video, we'll uncover 10 valuable tax-saving tips with detailed insights to help you optimize your tax strategy and keep more of your hard-earned money. Taxes are a significant aspect of entrepreneurship, and with the right tips, you can maximize your savings while staying compliant. Let's embark on this enlightening journey into the realm of tax saving. Tip 1. Choose the right business structure. Our first tip emphasizes the importance of choosing the right business structure. Selecting the appropriate legal structure can have a profound impact on your tax liability. Here's a more in-depth look. If you're a sole proprietor, you report business income and expenses on your personal tax return. While this simplifies taxes, it may not offer the same liability protection as other structures. Limited liability companies, LLCs, combine the benefits of simplicity and liability protection. You have the flexibility to choose how you're taxed, either as a sole proprietor, partnership, or corporation. Now, on to tip number 2. Tip 2. Keep accurate records. Keeping accurate records is a fundamental tip in the world of taxes. Maintaining meticulous records is not just about satisfying legal requirements, it's about ensuring that you claim all eligible deductions and minimize your tax liability. Consider implementing an accounting system that suits your business's needs. This system should allow you to track income, expenses, invoices, and receipts efficiently. Organized record-keeping simplifies tax preparation and ensures you're well prepared in case of an audit. Moving on to our next tip. Tip 3. Deduct all eligible business expenses. Deducting all eligible business expenses is a critical tip for tax savings. Familiarize yourself with allowable deductions for your industry and business type. Common deductions include office expenses, travel costs, marketing expenses, and even educational expenses related to improving your skills in your field. To succeed in this tip, maintain a comprehensive list of business expenses and retain supporting documentation. Consult with a tax professional to ensure you maximize your deductions while staying within legal bounds. Now, let's delve into tip number 4. Tip 4. Home office deduction. The home office deduction is a valuable tip for entrepreneurs who operate from home. If you have a dedicated workspace, you may be eligible to deduct a portion of your home-related expenses, such as rent or mortgage interest, utilities, and maintenance. Here's a closer look at this deduction. To qualify for the home office deduction, you must use a specific area of your home exclusively for business purposes. This area can be a room or a portion of a room, but it must be where you conduct substantial business activities. On to our 5th tip. Tip 5. Tax credits. Exploring tax credits is a lucrative tip for entrepreneurs. Tax credits directly reduce your tax liability and can result in significant savings. Here's a deeper dive into this topic. Tax credits are available for various purposes, including research and development, R&D activities, energy-efficient investments, hiring certain employees, and providing health care coverage for your employees. And now, on to tip number 6. Tip 6. Retirement plans. Utilizing retirement plans is a strategic tip for both tax savings and future financial security. Contributing to retirement accounts, such as a 401k or CP IRA, can lower your taxable income while helping you build a nest egg. Let's explore this tip in more detail. A 401k plan allows both you and your employees to make tax-deductible contributions. Contributions are made pre-tax, reducing your taxable income. Plus, earnings within the 401k grow tax-deferred until withdrawal. Now let's move on to tip number 7. Tip 7. Consider Section 179 depreciation. Considering Section 179. Depreciation is a tax-saving tip for entrepreneurs who invest in equipment and property for their businesses. This provision allows you to deduct the full cost of qualified assets in the year they are placed in service. Here's a closer look at this strategy. Section 179 depreciation applies to tangible personal property, such as machinery, equipment, and furniture used for business purposes. It's an alternative to the standard depreciation method, which spreads the deduction over several years. Moving on to tip number 8. Tip 8. Strategic timing. Strategic timing is a smart tax-saving tip. Timing your income and expenses strategically can affect your taxable income. Here's a more detailed look at this strategy. Consider the fiscal calendar of your business. You might choose to defer income to a lower tax year or accelerate deductible expenses when possible. For example, if you anticipate higher income next year, you can delay billing clients until January to defer that income to the following tax year. It's important to note that the IRS has rules in place to prevent abuse of this strategy, so consult with a tax advisor to create a tax-efficient timing strategy that complies with tax regulations. Now, let's explore tip number 9. Tip 9. Regularly review. Tax laws. Regularly reviewing tax laws is a proactive tip for staying informed about potential tax-saving opportunities. Tax laws change, and staying updated allows you to adapt your tax strategy accordingly. Here's a more comprehensive look at this tip. Tax laws can change at the federal, state, and even local levels. These changes may include new deductions, credits, or alterations to existing tax codes. Finally, our last tip. Tip 10. Seek professional guidance. Seeking professional guidance is a wise tip for entrepreneurs navigating complex tax matters. A qualified tax advisor or accountant can provide personalized advice, optimize your tax strategy, and ensure compliance with tax regulations. Here's a more in-depth look. A tax advisor can help you assess your overall financial situation and tailor a tax strategy to your specific needs. They can also provide guidance on tax-efficient investment choices, business structure decisions, and long-term financial planning.